Hello, welcome to Emotional Traders. So, how is the last week trading? Hope you are done with profits. Okay. So, if it comes to this particular session, like in this session, I am going to discuss about my current week PnL. Okay. The same way as everyone knows that always I show the cumulative PnL. So, total 7 weeks verified PnL. Okay. So, maximum this will take 2 to 3 minutes. After that, so I'll be going to explain about the call ratio spread. Here, explaining what is the call ratio spread is not my motto. So why? Because if you go to the YouTube, you can see n number of videos on call ratio spread. Okay, that is the reason what is call ratio spread is not my intention. Okay, so majorly I am going to focus on when to deploy this particular call ratio spread and who can deploy this particular call ratio spread and psychology challenges after deploying this particular call ratio spread, what we are going to face. Not only this particular call ratio spread, you take any strategy, you name it any strategy. So after deploying the strategy, what kind of psychology challenges we are going to face, that we are going to discuss in detail. Okay. So now first let me go to my PnL session. I'll go to the reports. I'll go to the PnL report. I select September 8th to September 12th. Actually, Friday I have not taken any trades. I was out actually. So, but okay, anyhow, we have to show weekly PnL. So, I have selected 8th September 2025 to 12th September 2025. FNO, click on submit. Okay. So, if you see, this week my PnL is 20,000 rupees. Out of 20,000 rupees, around 1200 rupees are the charges. So after deducting the charges, the total net realized PnL is like 19,188 rupees. Okay. The same thing, this particular details I have recorded in Excel sheet. Okay. If you say this is the 7th week and 19,188, this is what I have recorded. Okay. So now I'll go to the cumulative PnL. So total 7 weeks PnL I am going to show. So if you go here, so we have started our trading from 28th July. Okay. So from 28th July to 12th September 2025, I'll click on the submit. Okay. So this is our total 7 weeks PnL. So almost 90,000 we made a profits, out of which 22,000 are the charges. So 67,000 rupees like we made a net realized PnL for total 7 weeks. Okay. So if you come here, the same thing I have recorded into this Excel sheet. Okay. So this is the 7th week, total 67,000 rupees. So total profit we are having. Okay. So now the same thing, let me go to the share PnL session. I'll go to FNO, I'll mask it. Okay. Yeah. So here if you see the 28th 07 2025 to 12th 9 2005 generate. So I'll copy this. Okay, I'll test it here. I'll just paste it. I'll click on the enter. So same thing. This is the realized PnL. So these are the charges and these are the net realized PnL. Okay. So this is all about my total 7 weeks PnL report. And now we will go to the call ratio spread discussion. This is all about the call ratio spread. Now let us take a case study. So assume that there is a retail trader, Mr. Rajendra. This Rajendra has seen a YouTube video about this particular call ratio spread. So what exactly the call ratio spread? Assume that currently Nifty is trading at 25,000. Then buying 25,000 call one lot with 200 rupees. Then this premiums, half of the premium, which means that 100 rupees, selling 2 lots, which means that 25,300 C is selling 2 lots. Okay, half of the premium, 200 premium here, 100 premium here, but here buying 1 lot, here selling 2 lots. Okay, so buying 1 lot call option and selling 2 lot of call option with half of the price of buy option, we call it as a call ratio spread. This majority of the people knows about it, and even YouTube also you can see n number of videos. Okay, fine. The same way Mr. Rajendra also, he seen this particular video in YouTube. Now Rajendra has decided to implement this particular one, and he wants to know more about this particular call ratio spread and adjustments and backtesting results before implementing. So he joined the course by paying 15,000 or 20,000 rupees. Rajendra is joined the course. Okay, so in the course, like what the trainer is teaching, okay, I'll go to this. This is the call ratio spread payoff diagram. Okay, so if you see here, I'll explain in detail. 25,150 CE, one lot, they're buying at 225 rupees. The half of the premium, 225 rupees, half premium, that is 110 rupees. So which means that 25,400 CE, they are selling 2 lots, buying 1 lot and selling 2 lots. This we understand the call ratio spread. If you see the payoff diagram, now what the trainer is telling, after taking the position, whatever the market falls, there is no loss. Very good, excellent. So which means that downside, there is no risk at all. If it comes to upside, like we are getting a wider range, which means that, say here, almost 25,644, this is what we are going the wider range. So this is the best strategy to implement it. This is what trainer is teaching. Very good. Yes, payoff diagram also the telling the same thing. So what is our break even point is this one. So 25,644, after crossing this only the losses will start. Very good. Okay, this is all about call ratio spread. Okay, so now I'll go to, okay, so the same trainer, now he is showing the back testing results. Okay, so by using the back testing software, like he will be taking 2 years, 3 years, and in the back testing results, what we can see, this maximum profit, maximum loss, winning streak, losing streak, how much ROI we get. January month we made a 3%, February month we made a 4%, in the year of 2021 30%, in the year of 2022 25%. Excellent. Back testing results are tempting. The Rajendra felt so happy. Oh, this is what we have to implement it, and he seen this particular one. So now assume that Rajendra got the doubt, what if market reaches to this particular level? Okay, so assume that market started trending, and what if the market reaches to 25,644 level? So then the trainer is teaching the adjustment concept called as a martingale. Okay, so he is teaching the concept called as a martingale. So what is the martingale? So martingale is nothing but buy 1 lot, sell 2 lots, buy 1 lot, sell 2 lots. Okay, so which means that I'll explain in detail. See, after taking the position, if market started upside, then what will happen? This particular call will give the profit. Yes, right? Very good. So then what is the problem? This 25,400, it will started giving the losses. Right? It will started giving the losses. Now, what the trainer is telling, implement the martingale. So implement the martingale in the sense, buy 2 lots. Say for example, this 25,400, he will buy 2 lots. For example, why? Because here 2 lots is there. So buy 2 lots, which means that he is closing this position. He is closing this position and opening the position with 25,700 with 4 lots. Sell. See here ratio I have taken 1-2. Here I am taking 2-4. Why? Because here we have the 2 positions. So 2 buy and 4 sell. Then the trainer is telling, now the break even, new break even after doing the martingale will go to 25,800. So we have a more wider range. We have a more wider range. This is what the adjustment is telling. Okay, very good, excellent. Backtesting results are perfect. This payoff diagram is perfect. Everything looks good. Rajendra felt so happy. But when Rajendra started implementing this in the live market, as soon as it reaches here, okay, so as soon as market reaches here, like he'll be saying like 4,000 rupees loss or 5,000 rupees loss he is seeing. So by looking at this particular loss, like fear is started with Rajendra. Fear is started in Rajendra, and now what he will do, he is closing these positions. He is closing position. So Rajendra is booking the loss here. But backtesting results are perfect. But in the live market, VIX is rising like anything. Not even reaching to this particular level. Before reaching the break-even point, here itself we are seeing so much losses because VIX is rising like anything. With that fear, Rajendra will close this position. Say for example, some Subbarao is there. He is somewhat he can able to hold the losses, and he implemented the martingale concept. What is this martingale concept? Basically, previously 2 sell lots was there, that we are making 4 sell lots, which means that sell lots we are increasing. So if trend continues, martingale will give more losses, which means that without adjustment losses, after adjustment losses will be more. So this is the problem with martingale. Martingale is the worst concept. This is what happening. So very bad thing happened here. Okay. So now what is happening here? YouTuber happy, trainer happy, broker happy, backtesting company happy, government happy with the tax test. Only Rajendra is suffering. Why? Because VIX rised like anything, and he is not able to hold the trade. With fear, he come out of the trade and he booked the losses. Then what the Rajendra feel? So to make more happy these guys, like Rajendra decided to take a new course. Rajendra is decided to take new course. So Rajendra going to the loop. Continuously he is going to the loop again. So this is the main problem with the psychology. Okay, this is the main problem with psychology. Okay, so which means that backtesting results are excellent, and live market Rajendra failure. Not only this one, you take any strategy in the backtesting results are excellent. So whatever there in the backtesting results, the same thing in the live market we cannot implement at all. It is not at all possible. If that is the case, in the world no one will do the other businesses. Everyone will come to the stock market. So whatever the backtest results is there, the same thing we cannot work it out in the live market. Why? Because psychology will come and dominate us. Please understand this particular problem. Now you can ask me, sir, then why this particular call ratio spread is invented? Who can do this particular call ratio spread? Okay, so that I'll explain it here. If you see, there is a person called as a Mahindra. Assume that he has purchased 20 lakhs rupees ETF. Nifty BIS he has purchased worth of 20 lakhs rupees. Okay, and he invested this for the long term purpose. Okay, so in the long term purpose he is invested. Now what happened if he pledged this 20 lakhs, the broker will give 18 lakhs to trade. Anyhow, this ETF, it is a long term, and now he is getting 18 lakhs to trade in the options. So what Mahindra will do? So ETF, on top of ETF, he will implement the call ratio spread. So after implementing the call ratio spread, what happens if market falls? So he'll get nothing in the call ratio spread, it is a 0, no problem. Anyhow, ETFs are for the long term purpose, so no worries. Okay, so if market goes up, this ETFs will give a profits. Here call buy will give the profit. Only call sell will give the loss, but this profits will be more than this loss, and he can hold the trade. Okay, the fear factor whatever is there, that will not come into the picture here. Why? Because as long as market goes up, he will be getting a profit only, and he has a sufficient money here, he can do the martingale here. So if you do martingale, what will happen? The range will become wider. If that goes, more and more profits will come here. Which means that this particular call ratio spread is suitable to Mahendra but not to Rajendra. But Rajendra is getting trapped by looking into YouTube videos, taking a trainings, and that is not his cup of tea. This is what the problem is happening. Okay, so not only this particular call ratio spread, you take any strategy, like most of the people are suffering with this particular problem. Okay, so here what Rajendra need to understand, see, the Rajendra problem is psychology. Rajendra problem is psychology. Not only Rajendra, everyone's problem is psychology. Okay, I am not pointing the Rajendra here. Okay, see, if we have a tap and if we get a mud water through this tap, we have to clean the tank, not the tap. So we are cleaning the tap or we are purchasing the new tap. You clean the tap, still mud water will come. You purchase the new tap, still mud water will come. The solution is that you have to clean the overhead tank. The same way, you have to fix the psychology. You have to fix the psychology. Okay, so all strategies will not work to all the people. That is the reason for every time I tell the same thing again and again, we have to take the psychometric test. We have to understand our levels. Suitable strategies only we have to implement it. Then only we'll get a success. Okay, so hope you understand this particular topic and you understand about the psychology behind this particular call ratio spread. So kindly subscribe to my channel and please give the like to this particular video, and also please refer this particular channel to your friends and fellow traders. So we will meet Monday on Monday's PnL report. Until then, take care. Bye bye.